And media friends, good afternoon. I'm the speaker woman from CDF April Pan. Welcome all of you to join CDF's 2023 Q3 investor conference call. And today's agenda will have 4 parts. And first of all, we will invite the CDF president, Steve, to talk about the overall performance review of CDF and also the strategy update of ABCD strategies. And next, our CFO, Jenny Huang, will explain the financial overview. Then for each subsidiary, we will invite Mandy Zhao to cover the performance upgrade. And next, the last session will be QA. Before I invite Steve, you can use the interpretation function in WebEx.
So now I hand over to our CEO, Steve. Steve, stage is yours.
谢谢，你们好，大家晚。So I want to give you a brief update of our financial performance for the first 9 months of 2023. Our net income was $17.5 billion, with earnings per share of $1.05. We continue to drive innovation and transformation as a sole recipient of the IDC Digital Infrastructure Award in Taiwan, and we're also selected to the FTSE4Good Emerging Index for the 7th consecutive year. In terms of China Life, 9-month net income was $11.3 billion. They continue to remain focused on high-value products and increase their market share of regular paid policies. VNB margin also continued to go up, 35.3 versus 29.3% at the same period last year. And we managed to also increase our pre-hedging recurring yield by 10 basis points up to 3.85 as of the end of September. For KGI Bank, 9-month net income of $4.2 billion and annualized ROE of 8.9%. We continue to grow SME and personal loan business, which grew 16 and 24% respectively. And our consumer finance business is up 252% year on year with a profit of RMB 305 million in 2023 so far this year. Also, our customer wealth management fee income grew 30% compared to the same period last year, and our AUM is now in excess of 500 billion NT. CDIB Capital 9-month net income was $1.4 billion with an annualized ROE of 6.5%. The board approved new investments in both Inolux Fund 2 and a data center project fund, which is expected to yield 6.4 billion in fee-paying AUM next year. We also pledged up to 3 million NT in a matching fund in the NDC's Regional Revitalization Initiative as a partnership to support micro and small businesses to energize local economies. KGI Securities delivered a very strong set of results with net income of 5.4 billion, 101% increase on last year. And overseas contribution was also up 172% with a 13% ROE, which was above the industry average. We remain number 1 in ECM and DCM and also increased our brokerage market share from 10.4% to 11.4%. Customer AUM also continues to grow strongly, up 25% year on year, up to 413 billion as of September. Also, as of late November, our OCI valuations remain at a comfortable level, which should enable us to pay a dividend in 2024, subject to AGM and Board of Directors approval. If you now turn to the next page, a quick update on our overall strategy. We continue to accelerate our digital efforts and have expanded our partnerships and alliances to build ecosystems. We're also beginning to include AI into our lead and innovation part of the strategy. Our employee engagement continues to improve. Results of this survey this year were 73, which are up on 68 the year before, 61 2 years ago, and 53 3 years ago. Anything above 70 is considered outstanding. In terms of customer focus, we've continued to drive NPS. We recently received overall results based on third-party double-blind studies, which show that we're number 1 overall and also tied for number 1 in digital. We continue to reposition our brand around committed to your prosperity. And you'll hear shortly a quick update on where we are with the China Life rename to KGI Life. We remain focused on driving growth, and our AUM is now $4.3 billion for the group, on target towards our goal of $5 billion by 2025. We continue to focus on transforming our IT infrastructure, and a lot of work continues on building open AIs and shifting more of applications to the cloud. And as you saw a few moments ago, we continue to maintain very strong ESG leadership. If you go to the next page, I'll only touch on a few examples of what's been occurring in our businesses. China Life has launched over 100 new functions in our customer app, and the percentage of self-service ratio has increased from 9 to 17%. We will complete the rebrand of China Life to KGI Life in January 1st of this year, and there'll be a press conference in December to announce this in more detail. We remain focused on driving foreign currencies, and our market share is now number 1, with FYP reaching 21.2 billion. And we remain ranked number 2 in protection type products, with FYP reaching 15 billion, a 30% year-on-year growth. For KGI Bank, we continue to expand our alliance networks to now 11 partners. We launched KGIB KGIS consolidated onboarding process, which by automating over half the information continues to optimize the customer experience. The number of mobile app logins also continues to increase, up 20%, and now 87% of all our transactions are digital. And in terms of industry-leading deposit collaboration with nonprofit organizations, we reached 600 million during the first 9 months of this year. For CDIB Capital, we continue to explore new asset management products, for example, fund of funds and our corporate ventures. We also kicked off a beneficiary note program with a target size of US $33 billion, which is off to a very strong start. And our green asset investments reached 2.8 billion, up 7.4% on last year. KGI Securities also continues to increase their share of straight-through processing transactions, up to 50% compared to 23% at the end of last year. We strengthened our TCF and launched toll-free hotlines for elderly customers. We've now trained over 1,000 China Life agents who have passed the security specialist license exam. And we launched a new financial podcast, which was ranked top 15 for business programs during the first week. I'll now turn it over to Jenny to give you an update on our financials.
Thank you, Steve.
Distinguished investors, now I will cover the 9-month 2023 performance. Please go to slide 13. Our 9-month net income is 17.51 billion. KGIS profit has doubled comparing to last year, and China Life, due to hedging cost, they have seen some decline in their profitability. In terms of the consolidated net income, we have climbed up to 5% to 3.7 trillion, and our net worth has also grown from 209 billion to 235 billion of this year. Next page. KGIB's first 3 months net income is 4.2 billion, down 11% comparing to last year. This is because of the negative carry from the bond position. However, since we expect the rates will begin to ease, and we believe our negative carry situation will be eased. On the upper right chart, CDIB's 9-month profits, due to the recovery of valuation, and we have picked up our loss and then gained 1.4 billion by the first 9 months. And KGIS net income is 5.4 billion, which has doubled from the previous year. For KGIS, in terms of traditional brokerage, wealth management business, and other business have seen great increase comparing to the last year. And this is the capitalization of our subsidiaries. If we look at CDF, our double leverage ratio has dropped from 128% to last year to 124% this year. For the first 3 quarters performance and the recovery in our OCI, they have both benefit our capitalization in the holdings, and we believe we can maintain our double leverage ratio on a regulatory standards. And you can also see the 3 subsidiaries capital adequacy. They are all on a very sound basis. And now I'll hand over to Mandy to talk about the subsidiaries details. Thank you.
First, page 17, China Life. As you can see in the slide, for the premium income, the FYP in the first 9 months, the decline is because of rapid rate hikes. And China Life continues to focus on 6-pay products, including foreign currency products. As you can see on the upper right, the product mix, traditional regular pay has increased 36% YOY, accounting for 53% of the FYP. To strengthen the matching of asset and liability, China Life also focuses on the sales of USD policies. In the first 9 months, the market share of USD policy ranked number 1 in the industry, taking up more than 50% of FYP. And for distribution channels, China Life maintains a balanced approach and continues to increase the FYP contribution from its own channel. Now it accounts for 29%, and it also focuses on regular pay product and A&H. And if we look at FYPE, although FYP declined, but FYPE is roughly the same compared to last year, and regular pay takes up nearly 90%. Page 18, for BMB, value of new business, due to weaker premium momentum, BMB dropped around 9% YOY. However, because we focus on high-value products, as you can see on the slide, BMB margin reached 35.3%, which is much higher compared to last year. And for spread, due to the increase in hedging cost, the investment return is 3.57 and COI is at 3.02, maintaining a positive spread. And page 19, our portfolio, we value ALM and focus on long-term and stable income. With fixed income as the main allocation, China Life seizes investment opportunity amid rate hike. The asset allocation remains the same compared to last year. Part of the weight changes come from the changes in investment valuation. And the investment returns of each asset are as listed, and the figures for foreign investment are pre-hedge figures. Next, slide 20. Our recurring yield. Due to the increase in return from new money, the recurring yield in the first 3 quarters increased 10 bps YOY, and hedging cost, the percentage is 1.27, which is much better than the first half of the year. And for the hedging structure, the hedging ratio is around 65%. It has been lowered slightly. And for FX reserve, by the end of September, we have reached 16.53 billion, reaching the legal cap. Next, KGI Bank. Page 22, the net revenue due to rate hike. The financial asset related income increased by 70% YOY. However, due to rising funding cost, interest income has declined slightly, but the overall net revenue is the same as last year. Fee income grew by 6% YOY, while management related fee income grew 30% YOY. for NIM and spread, through loan structure optimization, the spread has reached 2.1% and NIM was affected by rising funding cost. The first 9 months, it has remained at 1.33%. We continue to maintain sound asset quality. For NPL, although the ratio went up slightly, but it's due to a single case, and this case has, however, sufficient guarantee, and now it has entered the disposal process. If we exclude that, the figure is 0.21. So we continue to maintain a solid asset quality moving forward. Next slide. As you can see on the slide, the loan mix, which is the same as last year. However, we continue to optimize the mix. As you can see, for SME, it grew by 26%. Customer loan grew by 17%, among which personal loans increased by 24%. On the other side, for deposit mix, compared to the same period last year, the change in deposit balance was mainly due to the increase in foreign currency at time deposit by 37%. Next, CDIB.
Please go to page 25. CDIB, in terms of its asset management business, it closed the first round of Kunshan Taiwan Business Fund, and AUM increased to 52.7 billion. In terms of principal investment composition by geography, China and global positions are both increasing, and mainly due to the fund disbursement and valuation growth. And the overall asset is 33.9 billion. In the next page, in the top right, the fee income. The CDIB continues to strengthen the asset management business to drive the stable fee income. And the first 9 month fee income is 420 million. On the top right, return is compared with the MSCI volatility. CDIB's investment positions is more stable than that of the market. On the bottom left and bottom right, in terms of the PE business, since 2020, this is a new business, private credit, and the business scale has picked up year on year, and it also contributes more interest income and fee income, and it contributes to more stable profit for the company. And the first 9 month revenue reached 240 million. Next, KGIS. Please go to page 28. The first 9 month ROE is 13%, outperforming the industry average. Their key strategy, including the overseas expansion and wealth management growth. In terms of overseas, the contribution accounted for 14.4% and compared with 11% last year, a significant growth. In terms of AUM, including wealth management, and both pick up 20 to 30%. On the bottom right, the wealth management related revenue increased 42% compared with the same period last year. In page 29, the net revenue in the first 9 months, KGIS first 9 month net revenue amounted to 11 billion, increased 33% compared with the same period last year, and mainly benefiting from the capital market stabilization and successful investment strategies. Brokerage income also increased 18%. On the right chart, we can see the leading position of KGIS in the market. And that's the performance overview of the 4 subsidiaries in the first 3 quarters. Next, we're going to move to the QA session. Thank you for your explanation. Now we'll move to the QA. We will invite institutional investors and analysts to raise questions. Please remember to press the wave your hand button to raise questions. The first question, Jamie from JP Morgan. Can you hear me? Yes, can you speak louder? Yes, okay. I have a few questions. For KGIB, it seems the NIM quarter-on-quarter is flat, and it is an adjusted number for NIM. If it's a reported NIM, what is the quarter-on-quarter trend? And secondly, for the management, do you expect in the future quarters the outlook will be flat? And the second question, NPL. The NPL growth is due to a single case. I don't know if you can share more detail about the case, about the region or the industry of the case. You mentioned you have fully collateralized of the case. So does that mean we don't have any extra provision for the case and will rely on the collateral disposal? As for China Life, can you share with us the recurring yield in this interest backdrop? If we look into the future for next 12 months, how much space for further interest hike? Another question is about hedging cost. You already reached the maximum limit of the FX reserve, so I don't know the exact number of the limit. If you already reached the limit, so in Q4, are there any benefits to the recurring yield in Q4? And second question about China Life, the FSC made an announcement about ICS intermediate measures for interest risk in RBC and IBS calculation. How much percentage in the calculation on the denominator? And the last question about CDF, your dividend policy. Some of your peers mentioned, based on what they understood, this year whether they can use the special surplus for the provision or write-off. It depends on the reclassification and the other equity. Last year, if you have any deficiencies, you don't need to provide more provision. I believe you're facing the same issue. So based on what you understand, are you going to follow the same approach as the peers? That means this year, based on the variation on the shareholders' equity and reclassification, so far the distributable reserve is still better than the reported earning. Thank you. Thank you, Jamie, for your questions. For KGIB, China Life, and CDF. For KGIB, we will invite the CFO from KGIB to answer.
About the NIM question, now the 1.33% is swap included. If we exclude swap, this figure is at 1.13%. There will be a 20 bips difference before and after calculating swap, and this NIM spread is actually increasing. The swap effects in the year at the beginning of the year is about 15 bips. And for the single case that affects our NPL, this is a case of business building in London. Now we are making the reserve based on the regulation. The current valuation of this real estate, we believe it will fully cover our exposure in the real estate position. And for China Life, you asked about recurring yields and other questions, and I will hand over to Lauren.
Good afternoon. For hedging cost and recurring yield, for the next 12 months, the increase of recurring yield, if the rate remains high, new money can be benefited. We think it's possible to go up. However, we need to look at the overall position. we need a bigger fund. So I think it's about 5 to 10 bips, but it depends on the rates moving forward. For hedging cost, we have reached the limit in September. The figure is 16.5 billion. And what benefit will it bring? Because FX fluctuates a lot, and it will affect hedging cost. We will continue to adopt a stable approach. And now I will pass the floor to Rochelle. Jamie, good afternoon. Based on current calculation, our interest rate risk under RBC and ICS is roughly the same. Starting from last year, Insurance Bureau has a weighted approach. The purpose is to bridge the gap between the two schemes. Last year, this year, we do not fall in that category, and before the transition, we won't fall into that category as well. So this is my response to that. Now, I will pass the floor to Jenny.
You asked about the dividend-related issue. Our view is the same as our peers. About the distributable dividend or revenue, meaning that if our OCI and our reclassification mark-to-market do not pose any further unrealized loss, then we will be able to use the revenue of the quarter or of the period. But we also need to make a reserve for 10% for capital. And I hope that answered your question. I have a follow-up question. If based on what we've seen end of September, end of October, our unrealized loss valuation, if we include the equity, shareholders' equity or reclassification, then is the net impact positive or negative? Based on the end of September's figure, we've already had the statement. The result is a positive impact. Okay, understood. Are there any other questions? And now Peggy from Morgan Stanley. Can you hear me? Yes. Okay, thank you. My question is that we see that the double leverage ratio by the end of September you maintain at the level of 124%, and is this is still relatively high since the regulatory limit is 125%. Would this affect the dividend payout of the next year? And what is your view or your strategy over the high DLR ratio? And what will you do to lower that? And also the ADT view on the Taiwanese stock. I would like to hear from the management. We will hand over to Jenny to answer the double leverage ratio issue. Regarding whether DLR affects the dividend payout, we need to maintain a stable financial status to give dividend. Although the regulation did not say if we exceed any limits we cannot pay the dividend, but we still concern our soundness of financial status figures. And now the ratio is at 124%. We maintain close control to the risk and the capital under the holdings. So our view for next year is still positive. We we have a level of confidence to maintain at the regulatory threshold of DLR. Peggy, your second question, you asked about the Taiwanese stock question. Can you elaborate? The ADT transaction volume, what is your view?
Yeah, I'll talk about the market. I mean, obviously, the market has continued to improve. I mean, we're seeing inventory levels being replenished. So our view is that the market trend will remain positive, at least during the first part of next year.
Thank you, Peggy. And are there any other questions? Now we'll hand over to Ms. Wan from Bloomberg. I've seen that in your investment portfolio, comparing to the last quarter, you've increased a lot of position in a foreign bond. Will you be increasing this position, and what will be your plan about that? And also for your overseas bond ETF, what is the percentage to the portfolio, and will you be adding more position on that? Thank you. We'll hand over to Lauren.
Good afternoon. We talked about this. The portfolio remains the same. The changes comes from valuation. As you can see, for foreign investments, it seems like there is overweight. However, because of rate changes, it will affect the percentage. And because of TWD depreciation, it seems like we have increased foreign investment, but that's not the case. And for the overall portfolio, we only do a minor adjustment. For a bond ETF, the percentage is not very high. It's around 4 to 5%. This is my response. Thank you. Whether we will continue to increase position. Our product strategy, as we've mentioned, we will focus on USD policies. For USD coming in, we will make foreign investments. With new funds, we will continue to make relevant positions. So new funds, you will purchase funds from USD policies will be used for foreign investment. Okay, understood.
Next question, Tina from President Holdings. Can you hear me? Yes, the floor is yours. I have a few questions. First is to KGIB. You mentioned the FX revenue. What is the amount for the first 3 quarters, and what is your outlook for Q4? Will you be carrying on the momentum for FX all the way until Q4? And also, I want to ask about the single case in overseas of the real estate. Will you be adding more reserve for that? And what is your cost of credit? Because whether your cost of credit will be at a low level. And I would also like to know about the loan and the fee strategy of KGIB, because the fee loan strategy maintains flat and fee is also not increasing. So I would like to know your view for the next year. And the second question goes to China Life for FYP, VNB, and hedging cost. What will be your guidance for next year? And third question has to do with venture capital. I know that you are a big shareholder of World Gym. World Gym might go to IPO in the next year, and after IPO, would it bring any more benefit to your holdings? And what is the valuation of World Gym on your book? That will be all. Tina, thank you for your question. For bank's question, we'll hand over to Chris. Regarding the first three-quarter FX swap income, it is considered stable. The 9-month figure is about 1 billion, and we expect that in Q4 the momentum will continue or even be better. But for next year, if we are looking forward, I don't think it's a great timing for us to determine because we still need to rely on the rate hike and the market situation and the single case impact to our NPL. Our credit cost is still maintained at 3 to 5 bips. So we believe that it wouldn't strike a big impact to our NPL. In terms of loan and fee, although they both remain flat, but the composition or the mix of the loan and fee has been changing. We have reduced position coming from large corporation and increased percentage coming from SME and P loan, and they have all seen good momentum. Although the overall fee income has declined, but wealth management related fee income increased by 30%, and what have gone down is the fee income coming from the large corporations. And we believe our growth momentum will continue, and we will be briefing you on the latest news in the next year. And for China Life, I'll hand over to Rochelle.
Next year, with less market fluctuation, FYP VNB next year will grow by 10 to 20%. That's our target. And for hedging costs, I will pass the floor to Lauren. Next year, because the spread between Taiwan and US, the situation won't be resolved soon. So the hedging point cost will remain high. That's swap and NDF. On the other hand, if we look at NTD exchange rate, it really fluctuates a lot. Next year, we think it is possible to maintain the same level as this year, but it really depends on the market condition.
Now we're open for the question session for the medias. Now we'll invite Shu Shen. We cannot hear you. Can you speak louder, please? Okay, thank you. And the corporate investor also asking about your dividend policies. Last year, you have a deficiency in provision, and this year you don't need to supplement, according to the CFO. So far until Q3, your net worth under equity is negative 65 billion. And next year, the dividend, do you expect to it recover to the your regular level, like this year, limited by your OCI? Thank you. Thank you, Shu Shen. We'll invite our CFO to answer your question. Yes, what you mentioned is correct. And this year, by the end of September, we mentioned our OCI plus the reclassification positions. It is a positive figure. So in this situation, when we consider our dividend policies, we can consider our current earnings. And that's all from me. Are there other questions? Jamie from JP Morgan, you can ask questions, please. Sorry, I forgot to click the button. Shushin, do you have more questions? If yes, you can speak out. I would like to confirm what Jenny's answer. Can you hear me? Yes, we can hear you. Jenny's answer, do you mean, so now in the other equities we see negative numbers, and those numbers will not impact the dividend payout next year? I just want to confirm. Yes, because we only look at the current variation, you look at the accumulation number. Are there other questions? Thank you for your questions. And that's all for today's investment conference. We receive a question. And Chen Xingwen. Chen Xingwen, please. I would like to confirm your dividend policy. Last year you said you consider the soundness of your financial performance. Now your DLR ratio has recovered. And you just mentioned the unrealized loss in Q3, it is positive. So next year you expect it to pay the dividend. And this year you have 30 billion reserve. Yes, according to the regulation. It is compliant with the regulation to pay the dividend. Thank you. Okay, so no further questions. And that's all for today's investment conference. And later you can find today's recording in the investment conference area in our website. You can also download the PowerPoint. If you have further questions, you can call or email us. Thank you for joining today, and wish you all well. Thank you.